Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 29th, 2017. Now to get started this week we're going to begin where we always do with that all-important US dollar index. Now what I had talked about in the last several weeks outlooks is of course the US dollar institutional flows, which I'm going to identify once again right here. Now we can see that basically if we connect the dots here, we run this down to about the 15th of the month, we can see that the US dollar sells off. Now if we look at basically the end of the month or the start of the first week of the new month, we can see the dollar rises. Now I can identify this over the last 3 months. Basically this happens, in my respectful opinion, 9 of the 12 months per year. So once again we've got a base forming here on the dollar index, and that's consistent with these institutional flows. So we can see that with the line that I've drawn here, we can see that the VantagePoint is picking up on the same thing that I'm seeing, and it's showing that these institutional flows are dominating the market. And then towards the end of the month, and again the first week in the new month, the dollar starts to rise. Now some of the additional indicators that I look at here, the medium term crossing over the long term predicted difference in the opposite direction in which the market's moving. So when I combine all of this together, it tells me that the dollar is likely going to have a pretty decent week next week. Now you'll remember in last week's outlook I also warned everybody that the dollar was probably going to strengthen towards the latter part of the week, which of course did come to fruition. So we would look to build on that. Now our 18-day is still at 97.93. We have to clear this number to take the pressure off the downside, and we'll look for this 96.50 area to hold going into next week's trade. Now if we look at that analysis from VantagePoint and we combine it with the euro, there's a huge warning sign that the euro is about to basically sell off. We can see our medium term crossing over our long term predicted difference right here. We've got a top again that I talked about in last week's area that I suggested shorting into the 113 area is a reasonable play, and the euro is likely to stall below that level. We've sold off, we've finished the week, but we're still above this critical VantagePoint 18-day predicted moving average at 110.59. Now the additional indicators from VantagePoint, our neural index is down, strength indicator, short-term predicted difference, all down. So we would look for this to further sell off next week. Now when we combine that with the US Swiss franc, which is basically the exact same trade here, guys, euro US goes up, US Swiss franc goes down, and vice versa. So in this particular case we would look for the US Swiss franc to hold this 97 level or just below that level, and if nothing else we would be looking for a retracement back to this key VantagePoint 18-day predicted moving average coming in at 98.52. Now once again we can see that we have the medium term predicted difference proprietary indicator to VantagePoint. It's not a moving average, it's not based on a moving average, it's a very unique indicator, and it's measuring the strength of the trend, and in this particular case it's warning us that the downside is potentially very, very limited on this particular pair. So I would look for the euro US to move lower, and I would further look for US Swiss franc to move higher next week based around these indicators. Now with the British pound, I've talked about this one at length since this bar right here, and I've basically warned everybody, this is something I work on with my own direct clients again, is that what we look for here is to hold the gains after this big move up after the announcement of the early election in the UK. Now that's coming back to bite the pound here. Now the pound's been a valiant effort here to stay above and hold above this critical VantagePoint 18-day predicted moving average. You can see that we've had multiple tests of that 18-day predicted moving average, each time an excellent buy, but now we're losing that area. We've closed below the VantagePoint 18-day predicted moving average, and we're closing back below this range top from this swing high. So this is telling me that we're probably going to see the pound coming under pressure next week, potentially considerable pressure. So the critical level you guys want to watch here, 129.05. We're closing here at 127.94, but we have resistance building between 128.73, the VantagePoint 3-day predicted moving average, all the way up to the 129 area, and of course 129.27. So a considerable amount of resistance, a fresh triple EMA cross from VantagePoint. Neural index down, predicted short, medium, and long-term differences. But if we look at the position of the predicted RSI at 26.4, breaking that all-important 40 level, that could be the trigger of a much bigger corrective move to the downside. I'm not saying that we're going to get a trend reversal and the pound's going to go back into the 121 area, but what I am suggesting is that clearly the indicators, the correlation to 30 other markets, what VantagePoint looks at, they're all pointing lower. So we should respect that at this current time and look for this area between 128, selling into the 128.73 on a rally in thin illiquid markets on Monday or Tuesday of the coming week is a reasonable play. Now, with dollar yen next week, again, we've got a fairly significant resistance actually coming in that's been a tough nut to crack up here at this 111.98. You can see that we've tested that VantagePoint 18-day predicted moving average multiple times and we're moving away from it. However, going into the non-farm payroll, going into a potential rate hike in June, I believe that we're going to recover here. So we're looking for a break of this. Basically, let's round it out to 112 here area. We've got some of the signals we're looking at from VantagePoint, but very, very mixed here, guys. What I would do for next week is let the market come back into the lower part of this range around the 110 area. We reassess at that time, but we're looking for a break of these three key levels from VantagePoint: 111.54, 111.83, and of course 111.98, a critical VantagePoint level. Once we break above all three of these, then we're going to go higher, but if we can't get above those levels, we are likely to move lower. Now, one of the additional things I look at with the dollar yen using the VantagePoint software, of course, is the equity markets. Right now, the equity markets, more specifically, the S&P 500 is pushed through that all-important 2400 mark, excuse me, and it looks like it's gaining momentum. So as long as those stocks are going up here, guys, dollar yen is going to recover back to the upside. So keep an eye on your stocks very, very closely. Now, as we come into the USCAD, again, in last week's Outlook, I suggested US-Canada was getting ready to make a bigger move to the downside based on the indicators from VantagePoint. A very good move here, but now you can see that those indicators are starting to roll back to the upside. I also talked about in last week's Outlook this swing low right here coming in at the 134 area. We want to watch the area between 134 and 133.70 very closely. If that area holds, then we are likely getting ready to turn back to the upside on dollar strength. So keep a very close eye on oil also. Oil couldn't hold that $50 a mark barrel going into the finish of the week. I think we're closing down around 48. That's putting pressure back on the Canadian dollar. So potentially very good longs off of this area, and these indicators from VantagePoint are certainly warming up to the idea of further longs. Now, the area that we want to watch here, 135.50, if nothing else, in my respectful opinion, I think we're going to correct back up to that level. So watch these levels very closely, starting at 134.56, the VantagePoint 3-day predicted moving average. I'll just clear that off so everybody can see that nice and clearly. 133.56, we break above that. You can see we're closing very close to that level, but that could start triggering, and I would imagine shorts are going to be getting, your bears are going to be getting a little nervous down here after this big rally down from the 137 area, which I'll point out VantagePoint called very, very nicely right around the 130, just under the 137 area. So a very good trade there. Now, as we come into our final two commodity currencies, if gold sells off, oil sells off, the Aussie is going to follow it. So a lot of people do separate analysis when they're looking at the different pairs, but really these are all grouped together here, guys. They're commodity currencies: Aussie, New Zealand, and of course the CAD. So right now, very, very tough nut to crack here. We had a triple EMA cross, but the critical level to watch to begin this week, if the Aussie has any chance at all, we must get back up above 74.53 and close above this area. And this area around this, in this area here, I'm just going to color it all in so everybody can see it. We need a clean break of 75.50 to take the pressure off the downside once and for all. I'm not convinced next week is going to be that the move we're looking for, because again, as you can see, the VantagePoint proprietary indicator that I'm watching, the predicted differences, is moving, is crossed to the downside. That warns that we are probably getting ready to move lower. Now, as we go into the final pair here, New Zealand US, I talked extensively about this one actually over the last couple of weeks also, and basically a lot of your major funds, and it's funny guys how when these announcements come out from the market pundits, they're saying they're all short New Zealand US, and then New Zealand US breaks higher. This is a classic bear trap here, guys. Try not to fall for them. I warned everybody that when we break this channel right here, we already had a 3-day early warning sign from VantagePoint that actually New Zealand US was going higher. The VantagePoint software, in my respectful opinion, was one of the key softwares that actually said that this pair didn't agree with what the market was doing, and they said, you know what, based on the correlation to 30 other markets, this pair is probably going to move higher. It did. We broke through this channel. However, I also warned about this area up here at 70.50. Now, this is the last area of major resistance where we sold off from. So you can see that we have spent the better part of this week up against this area. So in order for New Zealand US to continue to move higher, we need a sustained break of this 70.50 break of this level very quickly, or we are going to extend back down to the downside. Now, if this area continues to hold here, guys, shorts absolutely will work. Absolutely they will. So when we look at, I look for a needle in the haystack. I think there is opportunity on shorts on this one next week. You can see that medium term crossing over the long term predicted difference to the downside. So it looks like New Zealand, it's a make or break area for this pair. So potentially some very good opportunity here.